Hey, so I'm talking about yen pairs. You and I were looking at these a little bit. I'm
Right.
looking at euro yen right now, and I was making the point, and you may have your own thoughts on this, but what I was saying is that when you get these moves where there's hardly any big pullbacks, like it's just slight retracements followed by breakouts, I would say that those are like the strongest moves in the market. Those are like the strongest trends is when the pullbacks are very shallow and they just keep going and going and going. Um,
Right.
what's your take on yen pairs? Are you watching any? Which I know you said this morning to me off camera that you were watching it. Which ones were
Yeah,
you looking
I'm
at the
very
most?
GJ for one. I've been looking at that for a while, ever since the initial rate hike a few years, or not a few years, a week or two ago. Um,
Hmm.
oh, I still have some analysis written up on here, but so I was looking at a break in the highs, which it did end up doing, but I haven't really been present in the market this week, so I missed a lot of moves. But I guess now, um, it's kind of tough to buy at the highs.
Right.
So for GJ at least, I'm gonna be looking for a pullback, hopefully to that support level. But the two daily candles right there are just wild, very positive bullish pressure. Um,
Yeah, it
so
has been really,
you
really
know,
strong.
I'll have to play it by ear.
Yeah, I
Yeah,
noticed.
I'm very bearish yen overall. Sorry, go
Yeah,
ahead.
and yen has been. Yeah, I think there's like a slight delay. Sorry about that. I think the smart money tracker. We've talked about this point several times, but the Japanese yen, it seems just to stay pegged to the far left hand of this screen. What we're looking at is, of course, the COT report data. Um, this is showing us where institutional traders are positioned, hedge funds and large speculators alike. We have from the CFTC's commitment of traders data, we can see their positioning. And currently, the Japanese yen, as Frank and I have covered for the last few weeks on these streams, has been pegged to the left hand side of this screen, meaning it is one of the most, actually, it is on our list of things that we're looking at here, the most proportionally shorted asset on the institutional data that we have from the COT reports.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
So it seems like big money is very much piled in on a short trade against the yen and reaping the rewards of this that have set up for several weeks now. We've watched the Japanese yen stay on that 79% short ratio or somewhere near it for a while. And we can actually even see that, Frank, with those charts that, courtesy of yourself, you helped us put together. You look at dollar yen here, and you can see that the yen short over time, which is in red here, has not only been present since March 31st. We had a very low long ratio here. We've seen it slightly come back. It's now risen to about a 21% long ratio, but it's still, regardless, stays very, very much heavy on the short side is the Japanese yen. So I don't know what else outside of the yen. What are you looking at here going into maybe next week?
Well, so even on the opposite side of that, JP225, the Japanese
Mm-hmm.
stock market index, is heavily long. You can see it just keeps increasing in the long contracts over time. Um, and as well as they're scaling out of the shorts. So it's very clear what institutions are trying to do right now. That dovish BOJ statement a couple weeks ago where they're like, we're going to keep rates below zero. We're going to focus on economic growth. We're not going
Mm.
to, worry about raising rates anytime soon. Just very weak for the yen overall. So overall,
Yeah, and
just,
it
you know,
Yeah, it gives an interesting take on it, Frank, too. Like if you're looking at Japan in isolation, right? Their central bank, incredibly dovish. The Japanese yen, incredibly weak and shorted by institutional traders. And we can see their equity market reaping the rewards of that situation. It almost, for US related trading, paints a picture as to what things could look like if the Federal Reserve becomes more dovish at a point. And the markets are forecasting for towards the end of this year, perhaps going into next year, or in some cases, people saying even before the end of this year, depending on what happens with jobs and the economy, that rate cuts could be on the table at a point. And again, going off of this concept here with what's happening in Japan, we see a really dovish central bank and we see the stock market there really reaping the rewards. For those of you guys in the audience who are US indices traders, or you trade the FTSE, or you trade European stocks, if you trade indices, watch the central banks, because oftentimes people forget that the same tactics or same news events that people pay attention to for currency trading, they impact all markets. Currency trading, they impact the bond market, they impact the indices. Yeah, it's really interesting.
I've been looking at US dollar, which is way too strong, man. I don't know what's really happening, but we just need to keep up. I've been checking gold, also USD and Nasdaq, and also some other currency pairs where actually they showed us that, you know what, the dollar is getting stronger and stronger. So yeah, maybe everyone is expecting like Federal Reserve to increase the rates. I don't know, but because we also have the issue of debt ceiling, which I think maybe, I don't know, maybe they're not going to default on that, but things they're not actually looking as good as we think. They might increase the rates, maybe.
Yeah, it's an interesting time for the dollar, because I've made the point here in today's live stream and in my content recently that the dollar strength has been challenging for me, because it's a little bit confusing. It's a little bit, I would say personally, a little bit overdone. And I'm still predominantly short biased personally. However, I'm not jumping in front of this upward trend, right? So when it's so strong like this, I can't justify really, doing that. So
it's difficult to back up your statement to say I'm selling because of this or I'm buying because of this. You can't say the news were positive or negative. There's so much stuff going wrong, or maybe things are not as healthy as it seems, but the dollar is just getting stronger and stronger. So, and this might actually turn very quick and just change the direction very quick.
Yeah, and I think
later we have in few minutes, Powell is going to actually give a statement that might change. I think maybe we might see a bounce back, or maybe that will continue, but I don't think it looks good, because if the market is going to reverse, it's going to be obvious. Everyone can easily see that.
Yes, good points there in terms of the speech coming up, which of course, guys, happens in about 1 hour from now, about 55 minutes. We're going to be hearing from Jerome Powell. Now, I will say with his speech, it is not necessarily as pressing as perhaps a decision or some sort of panel going over what the next move is per se. It is not necessarily a decision point meeting, but it's still, anytime the man speaks, anytime he drops potential hints about what the Federal Reserve is planning to do, it is potentially market moving. And yeah, I mean, Kenzo, the thing for me with the dollar is that it's just so strong at this time, and I have a hard time shorting a chart like this. So even if I'm short biased in the dollar, many traders, I think, fall into the trap of saying, hey, this is too high, I got to short it here before there's any sign of potential weakness. So I've been mentioning that for me, I've got to see a breakout. I've got to see a move underneath 103.1, something like that. Show me that there is a failure from the bulls to hold this before I'm looking to get short myself.
Exactly. Yeah, so for now, it's a bit on my side, it's a bit confusing. I don't actually I've been like watching the news like for more than 2 hours, 3 hours, but I don't really get the exact point why things are getting like this. You see, so we just have to go with the technical analysis sometimes. I think sometimes fundamental alone is also, it will just confuse you.
Yes, no, that is very, very true, and this is why when it comes to this stuff, I like that you share in the same way that I do. We have a fundamental and technical approach. There is a mash of the two rather than just one, because one weakness of fundamental analysis is that sometimes fundamentals will give you a bias, but they won't give you timing. So you can have a bias, but yeah, right, exactly.
Yeah, like if you checked, it's yesterday. I think it's yesterday or day before that. There was like I think it's a retail sales, which were positive. I think for the dollar. I wasn't surprised when I see the dollar gaining the strength, but I was surprised to see the likes of Nasdaq pushing on the same direction, or let's say DXY. It's going with Nasdaq, like with the indexes. So it's confusing because mostly they opposite each other, even if they're not 100% correlated or negatively correlated, but mostly we know that if the other one goes this direction, we know that okay, the other one will go this way. But now if you check DXY, it's like on par with Nasdaq. They just go in the same way, which we never saw that actually before.
Yeah, and so you have to be careful with those kind of moves when you see the dollar, and this is one that Frank, who was just on the show, him and I had a period of time where we saw, I guess it was a few months back, maybe 2 months ago, the dollar and the S&P 500 were moving so strongly correlated together, positively correlated. It was very weird, and when that happens, it is a strange time, because like you said, a lot of times when you get positive dollar sentiment, it's usually off the back of hawkish monetary policy, which can put pressure on equities and things like that. So you see that inverse relationship, and when it breaks down and when they go the same direction, it can be very, very confusing. So I'm watching out for next week. I think that there will be perhaps some more directional bias as we come into the Fed meeting minutes. I believe we have next, it's either Wednesday or Thursday, I can't remember, but we have some news, I think tomorrow or Wednesday. Yep, you got Wednesday, the meeting minutes, and then of course on Friday we have core PCE numbers, both of which could be impactful and give some directional clarity, I guess, to this market. From then we could take the technicals and move. Here's the thing, guys. I think audience, for those of you guys in the audience, the reason we talk about fundamentals so heavily is because when fundamentals align with the technicals, it creates excellent trending opportunities that Kenzo and myself, we've had times on these shows where the technicals and the fundamentals, they align and they make sense, and the trades are just, they cut like butter. They make sense. And then other times, as a trader, you run into times where it's confusing. They don't match up. They don't make sense. And perhaps in those cases, this is where, as fundamental traders, we have potentially some extra caution where the charts are not marrying up with the fundamentals, and perhaps keeps you out of some bad trades. So Kenzo, you're watching the euro. Anything else that you're watching going into next week? What else are you looking at?
On euro, actually, I can see that still pushing lower, but when I check the structure, it seems to be still, actually, we are not actually crazy bullish, bearish momentum. There is a chance that maybe we might see the market trying to put the upside again, but for now you can't just take you can't buy for now. But as the market is not actually aligning with fundamentals, the market will come into reality. Then we might see a very quick reversal, because sometimes the market reacts according to something that might happen, especially I think maybe debt ceiling. Then it forgets everything about whatever that is going. After that, if they resolve that, then the market is going to go back to the interest rates, inflation and stuff like that. And then the market starts to react the way it's supposed to react. And mostly this time, actually, we lose because the market just does stuff. And once it starts to go back to normal, we're still confused. We're still waiting for some reversal, and the market won't even reverse when that time happens. So I think we just have to be ready. Another one is JPY. JPY, but on JPY, I think it's straightforward actually, because we know that JPY actually, let's say Bank of Japan, they did not actually increase their rates. That one, to me, it's straightforward. Everyone's still going to buy against the yen. That one, I don't see any issue. It's good to buy long term, as we know that maybe next month or next month, they're not going to increase their rates. You see, so, but I think it's good now to buy actually yen. To buy anything against yen, because we know that GBP or euro, they still can increase their rates. So it means yen will be they're going to be way too bullish against the yen. So besides that, I'm just concerned about the economic news on the US, especially interest rates. Then I just want to know if maybe they're going to increase or not. That way we're going to have confident buying or selling. But now we are still in the middle. We are not really sure.
Yeah, no, and I love those points that you made in terms of the European Central Bank and the UK, right? There's room to raise rates. Then you have the opposite effect when it comes to Japan. They're dovish, right? They're not looking to raise rates. So you have these divergences that I think can be exceptionally tradable. And I would agree with you. GJ and Euro Yen, those are some of the more clear technical and fundamentally aligning pairs. And I'm glad that you brought that up. So great pairs there.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.